First level thinking is simplistic and superficial, and just about everyone can do it, a bad sign for anything involving an attempt at superiority. All the first level thinker needs is an opinion about the future, as in, the outlook for the company is favorable, meaning the stock will go up. Second level thinking is deep, complex, and convoluted. Howard Marks.
Hello and welcome to Analyzing Finance with Nick. Today we're going to be talking about the concept of second order thinking and how it not only improves your investment performance, but it also improves just the ability of you to think critically and navigate the world more effectively. First, as a disclaimer, nothing in this video is investment advice. Please do your own investment research or due diligence before making any sort of investment, or contact an advisor to help you. If you have specific questions about your portfolio or your investments, feel free to contact me directly. We first need to start with what first order thinking is. First order thinking is direct cause and effect. So like, for example, stock price of a company goes up because they beat their earnings report by 10%. If I put eggs on the stove and it's hot, it will cook. The thing is that anybody can do first order thinking. It's just basic cause and effect. And as a result, if you're an investor, first order thinking doesn't really make you money because you could program literally an AI, or even before AI, just a standard text reading algorithm to automatically trade based off of certain headlines. So they like buy treasury futures if the Fed says any sort of adjective that implies that they might lower interest rates a little bit faster, or buy a stock price if the earnings report statement says the word beat or positive guidance. So there is no advantage really in first order thinking for investing or for life, because it's basically in the real world being Captain Obvious. Second order thinking works quite differently. Second order thinking is the decision-making process that involves considering long-term consequences and the derivative effects of certain prior actions. So instead of thinking about, for example, if the company beats its earnings and the stock goes up 10%, what other things are affected by the stock price going up 10%, or that company selling more of whatever product it expected? What did that mean for the economy? Or what does that mean for why are people buying those kind of things? And it's something that could impact other parts of the economy or of that given sector of the market. A common question to really get your mind thinking about second order thinking would be, and then what? So like, what are the reaction functions? What are the consequences of the choices or the event or the action that is the first order line of thinking? And I'm going to give two examples, one investing related example and one non-investment related example. Actually, they're both kind of economics and financially related, but I'll start with the more current event related one. And that is President Trump's proposal to put a 10% cap on credit card rates for a year. Let's just disregard the fact that it's like a coin flip chance at best that any legislation gets passed to actually put that into law. But let's say hypothetically you get an interest rate cap on all credit card balances in the United States. The first order effect is the borrowers have less debt burden. Like now, somebody who owes 20% of a $20,000 debt on their credit card now owes half the amount that they owed previously. So instead of owing $4,000 in interest this year, they own only $2,000 in interest this year. That sounds great for politics. It maybe will help you win votes, but that's not really the real consequence. The banks that issue credit cards are likely to go down in response because of reduced earnings. But that's all first order effect. That's all like the obvious. What is the second order effect of putting a cap on credit card interest rates? Well, the second order effect is reduced access to credit. There's a reason why interest rates on credit cards are high. It's because those who maintain long-term balances on credit cards tend to be less credit worthy than those who pay off their balance every month. And as a result, you need to be compensated to take on that extra risk. And that's what the higher interest rate is. It's basically the market signaling you're not as good of a credit as somebody who pays their bills on time. And therefore, you are going to have to pay a higher interest rate. And that interest rate for credit cards also varies by credit score and a variety of other factors. So somebody with a low credit score is simply not going to have access to credit, because why would a bank lend money to a consumer for consumer debt that has a low probability of being paid back, or too low of a probability to justify a sub 10% interest rate? And so what the natural response is would be to say, for example, cut credit lines and credit balances, or in fact, really just eliminate the ability to borrow on credit for anybody whose credit score is, say, below 750. I'm just throwing a random number out there. I don't know what the exact number is, but I mean, JP Morgan came out and said that if that bill was passed, they would have to cut credit lines by 80%, new credit card borrowers. And I think it may not be that high. They're probably doing hyperbole to scare legislators, but it would be a material amount. And that reduced access to credit is the second order effect. But there are more second order effects really beyond that. One, maybe the fact that these people do not have access to conventional credit will have to go to more alternative forms of financing, such as hard money lending or payday loans, to cover their expenses if the reason why they are racking up this credit card debt is not for conspicuous consumption, but it's the fact that their income is not enough to survive on. Or for those who are spending more for conspicuous consumption reasons, maybe they learn to live within their means and make better spending decisions, and on the net save more and improve their personal balance sheet. So in the long run, they'll have more money and that can consume in a more sustainable way at a higher level, because they're not spending their disposable income paying credit card interest. And that money that was being used on interest can now be spent on real consumption. That's another potential second order effect of a credit card interest rate ban. There's also the other consequences of maybe removing or reducing the amount of benefits and points that are given out to regular credit card users, which may discourage affluent people from using credit cards. So you see the example of the difference between what is first order thinking, oh, people are going to pay less interest in the next year on their credit cards. The second order thing, he said, is lost access to credit, changing spending priorities, money being used for savings or in consuming more in the long run because it's not being used on interest payments. That's kind of the difference between first and second order thinking. Another one really that I would like to give an example on is raising minimum wage for fast food restaurants. There's the first order effect is these workers that do keep their job are going to get paid now, say $25 an hour versus $20 an hour. And so before they have to pay taxes, that extra $5 an hour is going to result in an extra $800 a month in their pockets, approximately pre-tax. The other first order effect is obvious, is that due to higher labor costs, a lot of these fast food employers are going to fire workers and get their workforce down to maintain payroll costs, and or raise the prices on food at fast food restaurants, which is why you're starting to see a lot of fast food restaurants, especially here in California, have pricing that is getting close to more modest leaning sit-down restaurants. And so, but those are the first order effects. But what is like the second order really effect of all of this? Well, there are a few. One, you'll see more people going to either sit-down restaurants because the spread in costs between a fast food restaurant and a sit-down restaurant that's likely both better quality food and healthier. In addition, it's probably a more relaxing social experience than going to a fast food restaurant, it benefits the sit-down restaurant on the relative basis. The second is the fast food companies are going to invest more in AI and robotics to replace those workers. Like a lot of drive-through windows in many fast food places in Southern California are now almost entirely AI, and they're not even really interacting with a real person. And you expect the adoption of that to accelerate because the marginal cost of labor is much higher. And so the savings from switching are much higher. Even if it leads to a few more dissatisfied customers who don't like talking to a robot, the losses from that will be overwhelmed by the gains from labor savings. That's another second order effect. Another second order effect is maybe people will learn how to cook and eat healthier, and you might have a healthier population because they're not eating as much fast food for financial reasons. So they learn to cook and eat healthier food. Those are examples, again, of second order effects and second order thinking. And now with those two examples, both of Trump's credit card policy and fast food minimum wage hike idea, what can we learn from this? Why does any of this that I'm talking about even matter? First, it makes you a better critical thinker to think, and then what? Why? What are the other things that can be caused by this? It will make you aware of making better decisions. So instead of thinking about what a given decision in your life is going to affect you tomorrow or the next day, how's that going to affect you 3 months from now or 3 years from now? How are other people's reactions to that decision going to affect that life or other sort of consequences? And by thoroughly thinking this through second order thinking, you will probably make better and more logical choices in your personal life and look at the world in a way that is more critical and more accurate upon reality. The other thing is for investments, you will make better investment decisions. So if you think about what are the second order effects of things, you'll find new ideas. Like everybody and every algorithm is going to pick out what the obvious first order effect of a given item in the news. But if you could think of possible second order effects before the rest of the investment community catches on, then you'll have an edge and an advantage. And as somebody who actively manages money for a living, I'm always trying to look for these second order effect ideas. Another example, like the gold rush, like if they discover a bunch of gold in California, the first order effect is, oh, I got to go to California and mine as much gold as I can. Whereas the second order effect is to sell them blue jeans, picks, and shovels, like Levi Strauss, who made a fortune selling pants to miners in San Francisco. Or in modern day, that is like the content creator rush. It's like maybe like, hey, wait, I should start a YouTube channel. That's the first order effect. But if maybe the second order effect, if you think the content economy is really going to grow, is instead you should be selling microphones, cameras, or AI editing software to all the content creators who now want to get in the game because they see all the money being paid out by some of the higher end influencers. And that's kind of another example of really first versus second order thinking. And it could also lead to entrepreneurship ideas. So like you say, hey, you see some trend in society that's going on. If you want to start a business to capitalize it might not be directly participating, but providing the tools, the services, or dealing with the externalities of all those people flocking into a specific activity or industry. If you like this more kind of like analytical type of video and more investment focused, let me know in the comments and I'll try to make more of them. Like, subscribe, share, and hopefully meet us on the tour too. I look forward to talking to you guys all later, and thank you for watching.